Hello, everybody. Good morning and welcome to episode 10 of Tax Tips Tuesday by myself, Alicia Lowen, owner of Decimal Accounting, Inc. This is a live broadcast that I do every Tuesday from my Decimal Accounting Facebook page to bring my tax tips for individuals and business owners to you live today. So last week's episode was episode 9, which was about rental income. And the title of that was, What Can I Write Off from My Rental Income? And if you didn't watch that video and you do have a rental suite in your home, or perhaps a second condo or a second home that you're renting, especially if you're doing Airbnb or VRBO, you're going to want to watch that episode. And at the end of that episode, I mentioned that sales tax on rental income is a huge can of worms that I would address in my next video. So here we are with episode 10 to talk about sales tax for rental income in British Columbia. So this advice is going to be British Columbia specific because each province in Canada has different rules for their sales tax rates. So I wrote notes because this is a complicated topic this time. So you may not be aware that short-term rentals in British Columbia are required now to charge PST in most cases. And there's another sales tax that is called MRDT, which I think is municipal regional district taxes, and those are going to be specific depending on which area you live in. But especially the PST, this is a recent change. So before October 1st of 2018, if you had short-term rentals and you had less than 3 units, so less than 3 homes or condos that you had on a short-term rental, you were not required to be charging PST in British Columbia. But that rule changed, and I think the reason it changed is because vacation rental sites like Airbnb and VRBO are being increasingly more popular, and the province wanted to make sure that PST was being charged on those because it is taxable on hotel rooms. So if you go to a hotel in British Columbia, you will be paying PST and GST. And so I think what they've done now is said that because Airbnbs are so prevalent, that it would be similar to operating as a hotel. So what does that mean for you then as the owner? So there's a few situations where it is exempt. So you do not have to register for PST or charge PST if your gross revenue from the short-term rental is less than $2,500. So that's a pretty low cap there. A lot of people would be making more than $2,500, so watch out for that. Another situation where it is not applicable, you do not have to charge PST if the rate for your short-term rental is less than $30 per day that you are charging to your guests. A lot of the ones that I see, they're more than $100 a night, so I don't think a lot of people are going to get out on that exemption. And then the next exemption is that it does not apply to longer term rentals. So if you have like a tenant that you rent month to month, the cutoff is 27 days continuous. So if you are renting for a short-term period, where it would be PST taxable, the short term is defined as less than 27 days. So typically with vacation rentals, it's going to be only a few nights at a time, 2-3 nights at a time. And so then that is short term and is potentially PST taxable. The tax rate is 8%, not 7%. So the rate for PST is different on short-term accommodation. It's 8%. So they just bumped that up 1 extra percentage for you all. And the MRDT tax is potentially up to 3%. So now, if this is sounding like a whole lot of bad news for you, you don't have to worry if you are using Airbnb in British Columbia. I have heard that that site has started collecting the PST and the MRDT taxes for you and then remitting it on your behalf. So it's getting added onto the charge if you're using Airbnb in British Columbia. I don't know about VRBO, so that would be something to check if you're listening to these exclusions. And so if you're not excluded and your property is potentially PST taxable, I don't know about VRBO, and you'd want to talk to their customer service and make sure that PST is getting charged, because if it's not getting charged by the website, then you personally are going to be responsible for registering for your own PST account number and filing those remittances. Another situation would be if you're not using a hosting site, if you have your own website that maybe you're running a bed and breakfast type of operation from your home and you have your own website where people do bookings, then you really need to be careful, because in that case, as long as it's more than $2,500 in the year and more than $30 a night and it's short term, then you are responsible for having your own PST number and doing those filings. Now let us talk about GST. So GST is different from PST. GST is going to be federal, and it's through a whole different body. So the regulatory body is Canada Revenue Agency that collects GST, as opposed to the province of British Columbia, which is in charge of PST. So GST is not taxable on long-term rentals. So again, if you have someone that is renting your basement suite in your home, you do not need to worry about any sort of sales tax. None of these sales taxes are going to be applicable for long-term rentals. It's just the short-term rentals that we are concerned about. So there is another exclusion for GST. So if you are, so let's say it is short-term, so you potentially have to have GST taxable. If your annual total from your revenue, rental income revenue, is less than $30,000 in the year, you do not have to register for GST. But a lot of people do get to that threshold, especially if they are not living in the unit and they have it available year round. It is possible to get to that $30,000 even with just one unit. And that is something that I tried to do some research, and I could not find for sure if any of the sites, Airbnb or VRBO, are charging GST on your behalf. And so I think that the GST is something that the individual property owner is going to be responsible for. And so in that case, you would need to have your own GST number and you would need to file those remittances. And potentially you'd need to increase your rate by 5% to include that difference that you're going to have to pay to the government, because if you don't, it's going to have to just come out of your pocket. So that is my recap for you of sales tax on rental income in BC. If you are wondering about what sort of expenses can I write off against my rental income, go check out the last episode. Episode 9 was about that. And for you, if you are not already a tax client of Deximal, if you're listening to this and you're someone who has a rental and is thinking, oh, geez, this is a lot more complicated than I thought it was going to be, you can really benefit from the advice of a professional accountant, because things like this are really not as simple and straightforward as it might seem when you are trying to do your tax return yourself. So of course, I highly recommend that you use a professional accountant to do your tax return. So if you are interested in our service, we help people across Canada. So we have clients already we're in BC, but we have clients in other provinces across Canada, because our service is entirely online and paperless. So what we do during tax season is it's all done through a secure website. We have an encrypted site that we use, so it is completely safe to send tax documents back and forth. And we create a tax checklist for our clients that then they can respond to. I recorded a short demo of what this looks like from the client's point of view. And so if you'd like to see a demo of what the tax season process looks like from the client side of you, then look back on our Facebook page and you'll see the demo that I recorded there. Thanks everyone, have a great day.